there's enough entities globally that are demanding physical gold and silver for delivery. And I mean, it's the vaults in London and New York that have to supply it over and above what gets produced by gold and silver miners every month, right? Or every week. So, I mean, I can't prove this, but enough people have alluded to it. But banks, big banks that are the major, they're one of the biggest market makers in London and New York for derivative gold and silver. They have contracts with Barrick where they just, they buy gold as it's produced from Barrick. It gets drop shipped to Switzerland, refined, and it goes into Asia, in kilobar form, which is what the Asians prefer, as do the Indians. So when at the margin, when there's not enough gold and silver to supply what's being produced on a weekly basis by the major gold producers, that's when you start to see the vault levels go down. And that's what we're seeing right now. And I will say this, part of the reason that the premiums, especially for silver eagles and minted silver products, is so high is because there's massive retail demand for those products, but the mints are constricted in the supply of silver blanks that are sent to the mints so that they can produce enough to meet the supply. If they could produce enough, to meet the demand, if they could produce enough on a daily basis to meet the demand, the premiums wouldn't be this high. And it's not the coin dealer's fault that it's this high. They're not gouging the end user. It happens at the wholesale level. So what I believe, and again, I can't prove it, but we've seen this same pattern enough times over the last 20 years. When there is a growing shortage of physical gold and silver that needs to be delivered by the banks into the big boys, meaning, China, India, etc. Turkey's been a big buyer of gold this year. Those are deliveries that these banks can't default on. And so if they need extra supply of gold and silver that gets produced and refined, they're going to cut off the supply to the mints. And I think that's what we've been seeing since probably early this past summer, because that's when the premiums really started to shoot up.
No, looking at, definitely what we're seeing on the physical level here at Miles Franklin, we're seeing huge demand for physical metal, and I know wholesalers are running out of product. Your perspective on that, that it seems like there's a demand for physical metal on the large level, off the exchanges where people are taking, large institutions, it seems like, are probably taking physical delivery, but then also on the retail level, there's huge demand as well where, wholesalers are being wiped out.
Right. Well, and that addresses my point that physical gold and silver, that as it's produced, gets redirected away from the mints because they need to deliver. If Andy gets a phone call for a big order of silver eagles and he says, I just can't deliver it. If you want, I can order it for you, but I don't know how long it's going to take to come in. He can't sell these guys silver that he doesn't have. And that's the same thing with the big banks. If Indian importers are asking for a lot of silver, the banks have to supply it, especially if they're short LBMA forwards or COMEX futures. And so the bank, once there's a default at the big boy level, then the game is over. Everyone will know that everything that people have been whining about for the last 20 years about the manipulation and the foul play going on in the precious metals market, at once everyone will know it was true. So these banks will kick and scream and claw to avoid delivery defaults. And that's why the easiest source to cut supply off so that you have supply that prevents defaults into the big boys is to constrict the supply that goes to the mints at the retail level. So what if the little guy, has to wait for his silver or has to pay a high premium? The Indians aren't paying a premium like that. The Chinese aren't paying premiums like that, but it's happening at the Western mints. At the Western mints that are supplied by these wholesalers who can't get supply.
And as you mentioned, yeah, we are seeing delivery delays as well. I mean, pretty much all sovereign coins are at least 2 to 3 weeks out right now, if not 2 months.
Let's put it this way. I bet if the mints were allocated as much silver as they needed to produce as many minted products to meet the demand that they have, the premiums would shrink quickly, and the amount of supply that would be distributed through the mints would double overnight, and your order book would go to the moon, because the overall price would fall, and that would increase the demand for silver.
No, I mean, and that brings into the point that, we are seeing a lot of inefficiencies from the mints lately in the inability to produce the product right now.
Right, because they don't have enough blanks to produce them.
Right. And so your point then is that it's because of an actual silver shortage. That's why they don't have there's just not enough silver out there. That's why they don't have the blanks. Is that your point?
There's not enough silver to satisfy the demand that's coming from the mints and make deliveries to the big boys around the world that the banks are making deliveries in. Well, I'm talking large size deliveries, right? Millions of dollars, tens of millions of dollars, hundreds of millions of dollars.
Can you remind our viewers then, what is the end game of this if this kind of demand continues?
I mean, at some point you're going to have a delivery default, and there may have already been delivery defaults, but it doesn't. We had delivery defaults in March 2020, and they papered over it with the goofy, new contract that shares the allocation of gold between the COMEX and the LBMA. It's called the ACE contract. I don't know if you remember that, but they were on the precipice of defaults that would have been devastating to the banks that are short derivatives. So. I mean, at some point, again, I believe that over time, not necessarily in the time frame that we would like it to have happen, but over time, at some point, the market will correct this, and what will happen is there's going to be a notice of a default to a big boy that is made public, and then it's game over. And then you're going to see the price of gold and silver shoot up very quickly in a very short period of time. You're going to hear about you're going to hear about banks blowing up on their derivative shorts, and it's going to be chaos for a while in the precious metals markets. That's when you're going to have a real bona fide gold and silver rush. And I think we're seeing a low grade one now. I mean, you've read the reports about UK coin dealers being cleaned out of gold as a result of, what happened with the pension crisis over there. Well, and you guys are obviously short product. You don't have enough to sell into the demand that you have. And, again, to me, that's an indication of Gresham's law. And it's a low grade gold and silver rush going on.